Hey everyone, welcome back to Corporate Dakota. Today, TXNM Energy Inc. just filed their second quarter 2026 report, and I am seeing a huge shift in their financials that you need to know about. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company's earnings have shot up thanks to higher rates and more business. But a big merger deal is facing some serious delays. Let's dive right into the numbers. For the first 6 months of 2026, TXNM Energy Inc. saw its net earnings attributable to the company jump to $75 million. That is a massive increase from about $30.5 million in the same period last year. That is more than double the profit. This big jump in profit is mostly thanks to their two main utility companies, P.N.M and T.N.M.P. P.N.M in New Mexico saw its earnings rise by $21.4 million in the first half of 2026 compared to 2025. Mainly because they got approval for higher electricity rates and their transmission business is doing better. T.N.M.P in Texas also chipped in, with earnings up by $27.3 million. Again, thanks to higher rates and more customers. On the revenue side, Tennessee MP's utility margin, which is basically their revenue after paying for the cost of energy they buy, grew by a solid $43.1 million for the first 6 months of 2026 compared to 2025. This was driven by rate increases and more demand from customers, especially from those big commercial and industrial users, even though weather was a bit milder. This translates to earnings per S-hair of 67 cents for the first half of 2026, up from 32 cents in 2025. That is a huge jump, showing the company is performing much better financially this year. Looking at the balance sheet, TXNM has over $12.5 billion in assets as of the 30th of June 2026. Their long-term debt is significant, over $5.1 billion, but they have strong equity backing them up at nearly $3.6 billion. One thing that stands out is their short-term debt. As of the 30th of June 2026, TXNM alone had $483 million in short-term debt, a big jump from $181.4 million at the end of 2025. P.N.M and T.N.M also have their own short-term debt, adding to the overall picture. This usually means they are borrowing money for shorter periods, often to manage day-to-day operations or fund immediate projects. Their cash flow statement shows they generated $223 million from operating activities in the first half of 2026, which is up significantly from $1944.8 million in the same period last year. This is good because it means their core business is generating more cash. However, they spent a massive $581 million on investing activities, mostly on building and improving their utility plants, which is standard for this industry. On the financing side, they brought in $353 million in cash from financing activities. This mainly came from borrowing more money short term, but also from issuing stock. They did manage to pay down a lot of long-term debt too. Now, let's talk about the big merger. On May 18, 2025, TXNM agreed to be bought by an affiliate of Blackstone Infrastructure for $61.25 per share in cash. This deal was approved by TXNM shareholders and got the green light from regulators like the FERC and the PUC. However, there is a big hurdle. The New Mexico Public Regulation Commission, or NMPRC, is causing some headaches. They are investigating a $400 million stock purchase that happened before the merger deal was finalized. The NMPRC ruled this purchase violated a state law because it didn't get their approval first. They even slapped TXNM with a $100,000 penalty and are demanding TXNM figure out how to unwind that stock sale to protect customers. This has put the brakes on the merger approval process in New Mexico, and TXNM is trying to sort it out, but they can't say for sure how it will end. Despite the merger uncertainty, TXNM is still paying its dividend. They increased their quarterly dividend to 42.25 cents per S-hair, which is a good sign for investors who like regular income. Looking at risks, the company is facing quite a few. The merger itself is a big one, with the NMPRC issue creating uncertainty. If the merger falls apart, TXNM might have to pay a hefty termination fee. They also mentioned the impact of climate change with potential new regulations and the need to invest in cleaner energy, which could increase costs. They also have a lot of debt, especially short-term borrowing, which can become more expensive if interest rates keep going up. Think about it like this: if interest rates jump up, the cost to borrow money also jumps up, making it harder to make payments or invest in new projects. When we look at their credit ratings, Texas N.M. P.N.M. and T.N.M.P. are still considered investment grade by S&P and Moody's, which is good. It means they are seen as less risky borrowers. However, S&P recently changed their outlook to stable from positive, and Moody's noted that while the merger terms are not expected to hurt ratings, regulatory delays like the one in New Mexico could be a concern. So what is the overall story here? TXNM Energy Inc. is showing strong operational performance in its utility businesses, with profits and revenues climbing thanks to higher rates and customer growth. The dividend is also growing, but the looming merger with Blackstone Infrastructure is in a bit of a holding pattern due to a regulatory roadblock in New Mexico. This is a key risk to watch. If they can get that sorted out and close the deal, the shareholders are set to get a nice cash payout if not. The company will have to navigate the ongoing capital markets and its debt load, which is already pretty high. The risk I am watching is how this regulatory delay in New Mexico impacts the merger timeline and potentially the deal itself. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe, and join our Discord for more.